Welcome back, and joining me with more insight on the day's trade is Annatjie Van Rooyen from Regenesys Business School. Thank you so much for your time, Annatjie. Just talk to me about what you've made of what's driven markets this weekend. And actually, I think, in my opinion, it was a shift from kind of trade conversations and trade catalysts to the catalyst of consumer behavior, particularly what we got in terms of inflation from the US, the retail focus that was on the JSE, and actually what's coming up next week. So what have you made of all of that?
Good afternoon, and thanks for having me on your show. Well, the all-share index actually continues to consolidate above that 100,000 level, and this is despite the 30% tariff. And we've also seen very positive developments from the Department of Trade and Industry, who is actively assisting our exporters in South Africa. And I think the positive investor sentiment remains underpinned by the hope that interest rate cutting cycles will resume in the US and also continue in South Africa. That's despite the hotter than expected PPI in the US, because at one point the market was discounting a jumbo rate cut of 50 basis points. That's now down to 25 basis points, but I still do see the US cutting rates. I think markets are also underpinned by that extended trade truce by the US, between the US and China, and then obviously the better than expected tariffs, which is effectively standing at 18.66% currently. We also have CPI coming out in South Africa next week. It's expected to come in, according to our calculations, at 3.24%, and it's higher from the previous 3%, and that's on the back of higher fuel price during July and also higher utility costs. Then we also have the Trump-Putin meeting, which everybody is watching very closely, but I don't think too much is going to happen there because Ukraine is not present. So I think progress will be measured and contingent on subsequent negotiations.
We're definitely going to be watching out for that South African CPI print coming out next week. Of course, that should also give insight into what we could expect from the retailers as well, which have undergone a lot of pressure, particularly the apparel retailers this week. Well, Annatjie, let's take a look at some of the other news that have come out. China also coming out with disappointing numbers for the month of July. What do you make of this? Because a lot of the numbers that I've seen, some are pointing back to the kind of pressure that we saw during the COVID period.
Yes, those July numbers were weak, and they're actually reflecting ongoing challenges in the global economy, and also they've had adverse weather conditions, which also unfortunately were behind those numbers. But the data released earlier today reflected that industrial output rose only 5.7%. That's below the forecast of 5.9%. That's the slowest in 8 months. Retail sales grew 3.7%. That's the weakest in 6 months, below 4.6% consensus. And the jobless rate climbed to a 4-month high of 5.2%. The property slump persisted, with prices and investment continuing to fall. The trade truce has helped, but unfortunately, manufacturers' profits remained under pressure from weak demand and factory gate deflation. The latest slowdown was expected, as the major contributors to the outperformance in the first half of the year was government stimulus and preemptive trade, which have been fading out. So I think they're still on track to reach their 5% target if we see fresh stimulus during the second half of the year.
All right. Well, let's take a look at some of the company news that came out of the JSE Stadio, releasing its interim trading statement today, saying that they expect their core headline earnings per share to rise by as much as 32.7%. They gave us no color. What can you say about that trading statement?
No, there's, like you said, it's just a trading statement. We'll have to wait for the results. But what I can say is that this company is trading on a forward PE of 26.4, and this is a solid long-term value play in the higher education space. They do provide, or they actually always come up with stellar results, and headline earnings per share between 22 and 32, that's a great result to look forward to. And the other thing that actually stands out is the fact that this company has no external debt. Their margins are healthy. They have disciplined capital investment strategies, and they continue their strategic expansions. I think the latest addition is their campus in Durbanville.
Right, we're talking about expansion. Annatjie, what are you buying today? Your stock pick?
Let's go for Novo Nordisk because it's the LDT today for 40 US cents dividend on Monday. The Q2 results were great. The forward-looking statement wasn't so great. Investors were a little bit disappointed, but I think that actually creates a nice buying opportunity. And Novo Nordisk is trading on a forward PE of 14 times, which actually looks attractive compared to the long-term average rating. The weight loss drug market, as we all know, is in a dynamic and evolving space, and it's fueled by the urgent need to address the obesity crisis. This company has disciplined capital allocation, high cash generation, low leverage, strong balance sheet, and this will help them to weather macroeconomic challenges and also competitive pressures from especially Eli Lilly, which, by the way, I also like a lot.
Well, thank you so much for your analysis of what has moved investors' money this week, Annatjie. That was Annatjie Van Rooyen from Regenesys Business School.